And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. I'm Mike Harrison, and as always, we're working on your financial freedom. It's my privilege to be joining you today. Okay, I'm very excited to bring this show to you. This is a show that you will only get at Lifestyles Unlimited. You'll get a perspective today that you won't get. There's a lot of real estate podcasts out there. There's a lot of information out there, but this is going to be a perspective that you'll only find here at Lifestyles Unlimited. And what we're going to share today is I'm bringing on a lead investor to share his time with the show, and I'm going to explain right now what exactly he's doing. In fact, he just took over his second property, okay? He is a syndicator. He's a lead investor, as we call it here at Lifestyles Unlimited. And what he did was he found a business opportunity. He identified it. He decided with his financials and his bankers and his lenders that this fit his criteria. He then made an offer on this property, signed a letter of intent. So he had to go through that process and fight off all the other people trying to buy the property. And then he gets essentially a contract to buy the property. And then he has to bring the business deal to passive investors, people like myself, and say, hey, here's this opportunity. Here's what I like about it. Here's the business plan. Here's my 1-year plan, my 2-year plan, my 3-year plan. He has to go through all that. And then he has to get enough passives to agree with him to decide, yeah, I like what you're doing. I'd love to be part of this. So he puts together essentially a partnership, and then he purchases the property. And now we're at that crucial early takeover period. And I've been wanting to bring you this side as a listener for years now. So here we are. I've got my friend Holden on the show from Houston, Texas, second time lead investor. Holden, I know your time right now is a crunch. I can't tell you thank you enough for coming on the show today.
Thanks, Mike. It's my pleasure. Yes, it is quite hairy during the first few months of a property takeover.
It is the most important time there is. Let's use the analogy. The 747 is flying and it's losing altitude and it's headed toward the mountain, right, in the distant mountain. So you found this business opportunity that's not doing so well. We get that pilot out of the way. You're the new pilot, and now you're in that early moment. You're having to make the changes to this property. Before we get into that, why don't you share a little bit of background about yourself?
I am an IT guy by my background, and my wife, she's got a finance background. So the two of us, I thought would make a good fit in multifamily. Now, my wife, she's Wall Street, Goldman Sachs, private equity, and she published reports on real estate companies. And
wow.
She currently helps with managing our properties and raising our boys at the same time, by the way. I should mention that.
Ooh, juggling both of them. Yeah, that could be tough.
Yeah, especially when they're young, and we're just new. We're relatively new parents, so we've got two startups, I guess, going on.
Yeah, so you've got 2 children, and then you've got 2 projects. You've got your initial apartment community that you can't leave that one alone, and then you've got this new one that you just found and that you need to focus on. Let me ask you this, with her having that Wall Street background and you being an IT guy, so that's a corporate side there, how'd you even discover real estate?
As I mentioned, my background was in IT, and I had an IT job at a small but global firm, and they actually let me run all the offices that on the western half of the U.S. And
okay.
I was sort of an overachiever, but all I really got was a pat on the back over the years. No real significant compensation. A raise was difficult to justify, and large bonuses, they're not part of that company culture. And I valued loyalty. They were nice enough to let me run a business on the side. And that caused some jealousy issues for some coworkers. But what it did was it let me see a lot of different types of customers. So I ran this IT business on the side, and I had all sorts of customers that I serviced. And I noticed, I got to watch how these companies operated and grow. Some companies made a lot of money in a short amount of time, but they usually stopped growing, and you really never knew what would happen with these companies. But the real estate companies, they were different. I actually thought they were the worst companies. They didn't have anything flashy. They didn't have any exciting growth, big mergers, acquisitions. They really seemed boring. But a lot of my customers I had for many years, some for 15 years and longer. And I noticed the real estate companies kept growing. They never stopped growing, and they always grew in a steady fashion. Now, maybe it was just coincidence that they all grew, but that's what I observed with my customers.
Yeah.
And after about 15 years, all the real estate companies I worked for built tremendous amounts of wealth, every single one of them. And so eventually I would quit my job. And there was a time when I had to focus on one client that just happened to bring in a tremendous amount of income, relatively speaking. And I stuck with them for a while, but they actually outgrew me before we parted ways. But that experience let me see what the real estate sector looked like.
You're a husband and wife team. She's got some incredible finance skills. You have some amazing IT skills. My wife was not really happy when I started investing in real estate. I will tell you right now, she's laser focused. Okay, it's funny how things come around when you have some success. But it seems you and your wife were having a conversation. You're looking for something better and how to make money and grow your wealth and take care of your family. So talk to me about that conversation.
So after I quit my job, I stuck with one client and brought in a tremendous amount of income before they cut me off. And that allowed me to sit and think. This is right before COVID. And COVID hit, and I'm sitting on this pile of cash. And I might have been a bit naive or foolish, but I wanted to make more money than those real estate companies I mentioned earlier.
We're not doing this. This isn't the Salvation Army. I mean, we're doing this to grow wealth. So, yeah, I love your drive.
So I explored many kinds of investments, many investment options, including the possibility of running a company. I was even willing to try a completely different industry. Maybe I could just day trade. Who knows? But everything changed when we had our second kid. And then then I sort of, I guess, I hate saying this, but I sort of grew up. My decision-making process changed. It wasn't just about making lots of money. I had to consider my time, my energy, and also my appetite for risk with a growing family. So I spent a lot of time reevaluating what I wanted to do as a career. I even took business classes. I enrolled in real estate development program at Rice University. I did a lot of networking and studying at that time, trying to figure out how to make a living while spending time with family. And I asked a lot of people a lot of questions. And in the end, single-family rentals or multifamily made the most sense for our family. In my view, real estate has the best balance of risk and returns. And so we started out with a single-family rental, and we tried what we learned from Lifestyles Unlimited. And to our surprise, our first house outperformed our expectations. We didn't take a loan out like they tell us to do and like most people do. Usually you have to borrow money in order to make great returns. But even then, we almost doubled our money in 2 years. And this is with no loan. And and that kind of return is more typical of using a loan. Now, of course, all this happened during COVID when housing prices skyrocketed. So market forces definitely played a role in our success here. But after our success with that single family, multifamily was the next logical jump. And we already had some capital saved up and ready to deploy. We started our multifamily journey investing passively in multifamily deals. Okay. And so after trying out single family, and we actually did this while we were doing single family, and we felt more and more confident about operating our own multifamily property as a lead investor. And Lifestyles Unlimited definitely gave me the education, the connections, and the confidence to put together my first deal. And that was a 1 year journey. That was pretty hairy. I didn't know, really had no experience with multifamily. And looking back, it's almost unbelievable, how far I've come, and just to think how much Lifestyles Unlimited invests into their members. I couldn't have done it without that network, that family, and that I guess some of it was hand-holding, frankly.
It is a little bit, and I like the fact you tried out on the house. Okay, wow, yes, that worked. And then you took the next logical step. Well, let's go invest passively. Let's see what these syndications are all like from the view of a passive. And that's great that you have that experience because you know what your passives are expecting and you know what their questions may be and what they are trying to accomplish from that side of the deal. So, yeah, you took the logical progression and you did it actually in a short amount of time. I know you felt like that 1 year maybe dragged on, but to go from just before COVID to here we are 3 years later, and you're already on your second property. Tell me a little bit about this property.
Well, the second property just fell into my lap. I heard about it, but the seller, the pilot at the time, wanted too much for it, and it really didn't make financial sense. So I guess a series of market forces, high interest rates, lingering issues at the property. One of the partners was just really tired of running that property, so they decided to lower the price, and it eventually came down to a price that we thought would work. And I guess I had enough experience by this time to know that was going to be a good deal for us. Yeah,
it fit your strategy and the fact that you own another property. So you've already got your hands. You're in the kitchen, right? So you're already in there, and so you know what you're looking for. You know how to analyze the property. You had it on your radar. Good for you that you're watching the property. Was there any bid wars or anything like that, or you just reached out when you saw the price come down?
Well, there was a little bit of a bidding war, but I knew my price point, and I knew that with my track record at Lifestyles that we would be able to come up with the equity very quickly. And so I stuck. I didn't budge on my offer. And we had a pretty good narrative for why this property made sense for us. Our first property is actually just 10 minutes away. And we can share the staff between the two properties. So we don't have to hire a full-time property manager. We don't have to hire another full-time maintenance guy. We can share the maintenance and the management between the two properties. We might go a little bit above one full-time property manager and one full-time maintenance for the two. But the two properties made sense to run, to run as a couple.
Let's hold off right there, and let's come back on the other side, because what you're able to utilize is that economy of scale that makes this an even better value. My name's Mike Harrison. We'll be right back.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
You allowed 15,000 members into your sandbox.
Thank you.
And so that speaks volumes. So for that, and as a family.
So you know why I did that? Everybody always asks, why did you do this? Because I was an ugly kid. My parents used to have to put a pork chop around my neck so the dog would play with me. And so I always wanted to have friends, and I figured if I could make people rich, they might be my friend.
Join Dell and his successful friends. Start with the free online workshop. Register at lifestylesunlimitedworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm Mike Harrison. If you'd like to attend one of our free workshops, I invite you to freeworkshoplivestream.com. Come see how we make money 5 ways on a single-family property, 6 ways on a multifamily property. If it suits your investment idea, if it suits your ideas of investing in real estate, then I'd invite you to join Lifestyles Unlimited. But I encourage you to check it out first. But real estate investing will change your life. It has absolutely changed mine. I've got my friend Holden on here. He's sharing his perspective today. It's definitely changed he and his wife's life for the better, and he's got 2 children that he's taking care of, young children, and he also has 2 other children, and I call those apartment communities, and we're talking about Holden's second property, quite frankly, just because he just took it over. This is the most crucial time of buying this business, of this opportunity, is these early day one, the first week, the second week, just these early first 90-day period. And Holden, you were talking about that. So let's go into that discovery. You take over the property, you get involved, and what did you discover? Tell me what's going on out there.
Well, going back to how we got our lower price, we actually did not bid the highest price by far on this property. And they took the lower offer because experience shows that if you have too high of a price and the team comes in and they look at the issues on the property, and especially with market conditions being as tough as they were, a lot of people will back out, and they wanted to get rid of the thing quickly. So they took our offer because we had a nearby property. They knew that we had experience running an older property, and they thought, okay, well, this guy, even if he sees the issues, he'll probably still take this deal, and that's exactly what happened. We saw a bunch of issues, and then even though they took the offer and we went through the whole acquisition process, after the takeover, there were plenty more issues that weren't disclosed. But we were, after our first acquisition 2 years ago, we knew that might happen, that would likely happen. So I was well prepared for that. There was a lot of margin built into the deal.
So you built yourself a very conservative cushion because essentially there's always going to be a skeleton in the closet, something that you discover. Can you maybe share what some of those are?
Well, the very first night after takeover, we had two major leaks that went all over the place. Day one, they affected 4 units, and it was and during this time, it's very difficult to find maintenance guys, especially those who will just get up and deal with a leak at midnight. So that was part of what I had to experience. There were some other electrical issues. Some of the issues that we thought would be an issue, like the sewage, ended up not being that big of a deal yet. So we discovered other issues that we had to deal with. Tenants, we thought we were going to get a good set of tenants. A lot of them ended up being, I guess, they're not quite not quite the demographic we'd like. The background checks were loose. The leases weren't solid. There were a lot of missing leases or leases that were expired. Now, we knew all of this going into this. When we go into a deal, we enter every single unit. We visit nearby properties. We review every single lease. And even then, after takeover, we still discover issues that weren't picked up during the due diligence.
Holden, you hit on something that is essentially a principle within Lifestyles Unlimited, and we talk about best product, best price by the best people, and you're making this a better functional place to live. And I think someone out there that doesn't understand what we do, they're like, wait, why would you be choosy about your residents? Don't you just get a body and put them in there? As long as they're paying rent, no big deal. But no, we have a criteria. We're making this property better than other properties. So that's why we have to go through, and you have to meet our standards. You have to pass a background check. You have to have a income at a certain level. We do require you to have renter's insurance in there. And so we are running best product, best price. And if you've got a functional place to live, somebody will pay a little more to live in the better product, the better price. And so it's all part of that. So Holden, tell me about some just simple improvements that you would bring to the table day one, week one, month one that you implemented early on.
Well, when we took over, there were about 60 work orders that had been deferred. And these are the ones that they recorded. So there's also a lot of other issues that aren't recorded, but these are just issues that the prior owner just didn't either didn't have the resources or just didn't have the willingness to address. And when we take over property, we want to address all of the work orders. But it was an uphill battle because we had trouble finding good maintenance, as I mentioned. So we were pulling we're just pulling maintenance wherever we could and trying to address these issues right off the bat. And at the same time, we immediately started upgrading some of the units. But that's part of our business plan, is to upgrade these units and get the rents to another level with a better product, of course. We're not just going to charge more rent, although this is a great location and rents were probably a bit lower than they could have been. We're actually going to improve the product. And as I mentioned, when you take over property, the seller's going to paint this pretty picture. They're going to say, well, it's okay. Yeah, there's some issues, but you'll be fine. And when you take over, you find out there's twice or three times as many issues as he was willing to disclose. And so when we were rehabbing, what we call renovating the first unit, we discovered issues behind the wall. We discovered issues with the walls. You'd press on the shower wall and it would just the whole shower wall would move.
Wow.
There were gurgling sounds in the sink. There were electrical outlets that weren't wired correctly. And these things when you're doing due diligence on a property, you're not going and testing every electrical outlet. They're not going to do that. And so you're discovering all these issues, and you're going to fix it as best as you can, and so that it's actually a better product. And so you don't feel bad about charging higher rent. They're actually getting a better product. So when we have the contractors come out and give us bids on how much it would cost to fix different issues on the property, this is before acquisition, I still didn't trust their numbers. I didn't trust that they caught everything. My experience showed that there's still stuff that they're going to miss. And so I took their numbers and I added a bunch to that because the worst thing in a deal is when you have to go and ask your investors for more money. And this is a deal that we had investors in, and I didn't want to be one of those leads that asked for more money because we ran out. Oh yeah, no one wants a cash call, if you will, out there. So smart move on your part. I love the conservative aspect that you're doing. Just in my family finances, I've got an emergency fund. I've got a what-if fund. And the fact that you're kind of baking that into your investment and it still makes sense to your passive investors is fantastic. Let's go back to something you mentioned earlier. And essentially you said you were sharing labor from property one to property two. Why is this not a minus for property one? And so a passive investor may not be happy about that if they're investing in that one. And why is this a plus? Why would somebody that's potentially investing in property two think this is a good idea? Well, our first property is about 56 units, and it really doesn't need a full-time maintenance guy. But it's going to be very difficult to find a maintenance guy that's willing to work 30 hours a week or 20 hours a week. Everyone wants full-time, either full-time or gig work, we call it.
Yeah.
And we had a full-time maintenance guy at our first property, and so when I presented this deal to my existing investors, or the investors in my first deal, I showed them the math. And basically, if we just reduced and the same applies, by the way, to the property manager. We don't need a full-time property manager for a property of 56 units. But where are you going to find a property manager that's willing to work 30 or 32 hours a week? Yeah. So I presented the math, and I said, look, if we reduce the payroll of our first property, let's just say conservatively $15,000, just $15,000, that would increase the value of this property overnight by $300,000. By $300,000. So basically, you're immediately increasing the NOI, the profit of the property, by $15,000. And the going cap rate, if we use a 5% cap rate in a good, dense urban submarket, 5%, you take that $15,000, you divide it by 5%, and you get $300,000.
Beautiful. Yes. So $15,000 equals $300 in value. Tremendous.
Yeah, that's it. Just reducing the payroll by $15,000 increases the value of the property by $300,000. So I presented the math to the investors, and I asked them if they were okay with me pursuing another deal. This is something that Lifestyles asks us to do. They want us to ask our investors to make sure our existing investors are okay with us being, I guess you could say, distracted by another deal. And we actually got a unanimous vote. Every single investor in that first deal voted yes.
It's the proper thing to do. And yeah, that's something that separates us from, again, everything else out there. And there's some really bad stuff out there. You should catch my show next week because we're going to talk about some of it. But that is just one little item within the white paper that we have that separates us from the others. And if your passives are on board, obviously you're doing a great job on property one. And the fact that you're able to identify this simple, hey, I'm going to reduce payroll here, and then I'm going to be able to have this person work on this other property. So your maintenance guy's happy. He's probably getting more hours than he was before. Is that correct?
That's right. Well, now in the beginning, we're trying to clean this place up. We're trying to fix all the issues. So we actually have two full-time maintenance guys so that we can just knock everything out. And the investors of second property, they know that they're not looking for a major profit in that first year. They know there's going to be a takeoff runway time in order to get this property stabilized.
That's that heavy lift in the early period that we're talking about, that early side of it, that focus on operations, get these work orders cleaned up, taken care of, fix the property the way it needs to be. Again, that makes a happy resident, right? The resident is our client. And if things are getting taken care of, chances are that client is going to do business with us again and renew their lease, most likely at a little bit higher rate because now everything is functional. Again, the business plan is coming together. So Holden, for me, when I look at lead investors, I really think there's three items, and I'm going to throw these three at you, kind of a surprise here. And I'm going to let you talk about it. But number one is what we've been talking about for the whole show, darn near, is that early massive focus on getting proper operations in place, especially in the beginning. How often are you yourself, you're on the property every day from what I understand, is that correct?
Almost every day, sometimes 6 days a week. Sometimes I'm only there 3 or 4 days. It depends on the week, but I am definitely working on this property, whether I'm at the property or working from home every single day, because there's so much to pay attention to in the beginning. It's not just fixing the issues. We're also transferring services over. There's a lot of paperwork to file. We're changing systems. The previous owner ran things using Microsoft Excel. I love Excel, but when you're trying to grow a multifamily company, you really want to use multifamily software. So we're importing everything into Resman. Of course, his information wasn't perfectly clean. There's a lot of cleanup to do on the data. And so that takes time. Then we have to audit that against the leases, against reality, and make sure what we're putting into Resman is correct. So garbage in, garbage out. We don't want any garbage going into Resman, or we're going to be dealing with that garbage and trying to clean that up later. And so all of that effort is on the front end. Yeah,
that's part of the operations, is getting the accounting in place. I like that you're obviously using a proper software to manage your property. Okay, let's go to item 2. This is a partnership. You have essentially a group of passive investors that have agreed to come on your team. Talk to me about communication with those folks.
A lot of our investors are first-time investors with Lifestyles Unlimited. So they are scared. They're nervous. And I remember when we got into our first multifamily deal, and it was very important. I looked at every report that came out. I read every word that came out. It was very important for us to get communications from the lead investor. And as a lead investor myself, I just want to take the spirit of that and comfort the investor. So the first 3 months of this property, I've committed to sending out an update, a very thorough update, every 2 weeks. Even if there's not much to report, I'm just going to talk about all the different aspects that we're dealing with, maybe provide some financial information if it's there, or some metrics on the property, and also all my thought process on what we're doing. And we're constantly changing our decisions, changing our mind on how we're approaching these problems. So I'm disclosing that to all the investors. And we have 53 investors in this deal, and we did that deliberately so that we could let some of the smaller investors in, get their feet wet. And we made sure we ran the numbers in a way so that if we have a lot of unexpected surprise expenses, the deal can deliver what we projected. So we did everything we could with the perspective of the passive in mind, the passive investor in mind.
Holden, that's fantastic. And you actually hit my third point in that answer. And my third point, again, what separates a good lead or an okay lead from a great lead? The ability to adapt and have a plan to move forward as you discover these items that are out there. So Holden, I really, really appreciate you coming on the show today. For the rest of you out there, I want you to remember, it's not the money, it's the lifestyle. Make it a great day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.